Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and what I like to do is I like to answer some of your guys' questions in the comment section. That's what I'm going to do. One of the comments is, with EVs, electric vehicles, gaining market share, is platinum still goodbye? So I've gone over some articles about electric vehicles and the batteries. The batteries are going to have problems probably around 2025, 2026 with mineral shortages. So I don't think the battery EV market, the BEVs, can be ramped as quickly as what most people think. So what's going to happen, I think, is we're going to start to ramp the hydrogen economy. The hydrogen economy in their fuel cells uses platinum. So I think platinum is going to be used in hydrogen fuel cells, and that's what they currently use. They use platinum doped with a couple of other minerals like copper and something else to make it a little bit more stable. So they are developing that, but I don't think they can cut the platinum out because the platinum is really the thing that gives it the efficiency. So that's my take there. Here's one. Hey man, my concern is these companies go up and down a lot based on nothing. I agree with the technical analysis, but what about the fundamentals? Without your uranium price moving significantly up or down, these companies should stay where they are. Just wondering, thanks for all the hard work. Well, uranium is below the cost curves. So one could reasonably say, if you're going to project forward, and I don't know what the inventories are at some of these nuclear utility plants, is the price has to go higher. So why wouldn't the companies themselves be priced a little bit higher, signaling that there's going to be a potential move in uranium? So usually what happens is the mining companies, they go up first before the actual uranium price moves. So it's kind of already being priced into the uranium companies. So it's not saying that they're necessarily move based off of nothing. They have to move higher. They have to move higher. It's like saying we need uranium in the future, but no one can make money. That's a uranium mining company. Well, very few. The very low cost producers can make some money, but right now the mid cost producers, they can't. And this is probably one of the lower risk areas to be buying something where the price has to go higher. I can't tell you when that's going to be, but that's what I think's happening. Is you're going to see a bunch of positioning, and inflation is going to push the cost curves higher, which is going to push uranium even higher. So I prefer royalty companies because if your cost curves get pushed higher because of inflation, they don't have that inflation problem. They just get a percentage of volume and price. And I know you're going to pay a premium for it. I get it. But that's your future. You're paying for future income, and the growth of that's going to be much larger than a mining company in a royalty company. And I saw there was another comment here. I just can't buy royalty companies with market caps at $1 billion while earnings are under 10 million with no dividend. While you have a gold mining company with PEs of 5 to 8 and dividends at 3 to 7%. I know it's a better business model, but come on. It all depends. What if the mining costs don't make any money? Have you looked at the back half of the gold and silver boom? I would say from 2004 to 2011, the gold and silver mining companies underperformed the physical metals. The royalty companies did fantastic. Your performance was much better buying royalty companies than the mining companies. The mining companies have been absolutely horrible. They only do very well at the beginning of a boom. And that's where we're at. We're at the beginning of a boom. We're at the beginning, at least that's what I think. I think we're at the beginning of a market that's about to take off. And then you can see that in the ratio of the XAU to gold ratio. We're at the beginning of this. When that ratio starts to turn back down after the beginning middle, you'd want to swap into physical metals, all of your mining companies, because the mining companies lag at the back half. That's when your oil goes way up and your metal prices are suffering. Then at the very end, the physical metals do very well. So the least risk way to play this, and the most kind of straight up way, is with just physical metals, and that's why I own so much physical metals. And I do own the mining companies right now, but at some point I'll probably get out, and people are going to say I'm early, but I will be early in relationship to the price of gold and silver peaking, because I'm going to be doing it off of the ratio, not necessarily off of the price of the actual things that they sell. Because what matters is the ratio. The price doesn't mean anything. The price is irrelevant in everything. The ratio is what gives you the purchasing power gains. So ratio investing, that's the only way you can make purchasing power gains in any asset, in any area of anything. Everything else is irrelevant. You could have prices go down and the ratio becomes super favorable to you and you make more money. So for instance, let's say you have a big decline in the stock market and you have a bunch of gold. But not the stock market, the real estate market. So the real estate market crashes by 30% or something like that. But your gold doesn't really go anywhere. It goes down like 5%. Or this is the best scenario, because this is what happened last time, is the real estate market crashed in 2008. Gold crashed with it a little bit. So housing crashed more than gold. So your purchasing power went up. Housing stayed low. Gold did this huge blow off top from 2008 to 2011. And the gold to real estate ratio was maximized. It was like 100 ounces could buy a house. That was an awesome period to buy a house with your gold. That's what I would have done. And I did that a little bit later than that, but that would have been a perfect time. And that's what we're looking for. We're looking for maximum purchasing power gains. We're not looking for price gains. We're looking for purchasing power gains. We're looking for assets to react against each other. And we want that that's the only way you can make purchasing power gains. There's no other way. So yeah, royalty companies, what they're doing, some of these companies, they don't have a lot of employees. They have super low overhead. Nova Royalty has 5 employees. That's it. They're out there gaining royalties at very low prices on projects. Their counterparties are big companies, and they're getting future streams. If we're going to go to this other world, where we're going from a fossil fuel-based world into something else, and we're going to have to do it at some point because we're going to have peak oil, and then you're going to have peak energy. I don't know how they're going to get all this stuff out of the ground. We're going to have a heck of a lot of people figure this stuff out. But I'd rather have the royalty on that than the actual mining company, because the mining company, if there's technological gains, the mining company will benefit, but the royalty is going to make money no matter what. Does not matter. The price could go through the roof. The margins could remain very low on the mining company, but if the price goes through the roof, the royalty absolutely destroys it. You'll make so much money, it's unbelievable. And that's what I'm playing. I'm playing that the price is going to move way up because of declining ore grades and increasing energy input costs and inflation. If we have that environment, inflation, declining ore grades, which we already have, we know that's a fact, and increased energy costs, which is a fact. Renewables are expensive as heck. They may look at the energy input for a solar panel at today's costs, but what if the solar panel goes up 4 or 5 times in cost, and your energy storage goes up, and in the inputs and all this other stuff, and the copper becomes short, and the copper price goes up, that connects all these things together. I mean, prices could go up substantially for your energy input costs. And if you have a royalty on it, does not matter. Doesn't matter. You could have a mining company, a PE of 5 or 8, but you know what? What if they don't make any money? What if they continue to make, what if they lose money? What if the price goes up 4 times and they still lose money? A royalty company won't have that problem. It goes up 4, 5, 6, 7x. Because one, it goes up 4x, that's the minimum it would go up. And if they increase volume on a new project, because all of the metal's still in the ground, they're not producing it right now, you're going to see this explode. And prices are going to have to go up, and their margins are going to have to go to some amount for them to produce it, which means that prices could go up substantially higher. And then someone's going to say, well, what if it goes up too high that they're just going to substitute it out? Well, everything's going up high. I think the royalties are the least risk way to play this, in my opinion. Least risk, biggest reward in a declining production environment where things are getting harder to extract, and then where energy input costs could be a problem. But that's just me. I'm just trying to cover my bases. The physical metals themselves in your hand is also a very low risk way to play this. And I like platinum and silver at the moment. Those are my 2 favorite. Yeah, I think that's kind of what everyone had for questions. To me, I like the royalty companies and I like the physical metals. That's the lowest risk way to play it. The diversified miners are good too, because they do pay large dividends, and that's where I have the bulk of my money. I also have a lot in, a good portion in some of these developer type companies, but the energy sector I think also is one of the best investment opportunities. Oil, natural gas, still, and then uranium I think is really good. The ratios are good, the value's good, and we're going to need this stuff like mad in the future. So that's my opinion. If you guys agree or disagree, please put it in the comment section. Love to hear your opinions. And thank you for listening. This is Finding Value.